Behind me, you see 1 month of price history with 3 items on the chart. A is the red line, is the 4-hour 10 EMA. I really think that you should be using that EMA for right now because as price is moving sideways in a consolidation compression type of move, it's the best fit line for general direction of micro and short-term timeframes, essentially answering the question, what's next and what's most probable to be next. Price is, as you can see, on top of it, and it's consolidating under this support and resistance line, which got the neckline of what a lot of pattern traders would call it almost perfect. This is actually a beautiful one. Inverse head and shoulders, which it did break out, came back to test this neckline, and then broke out once again. So Bitcoin price is on top of the red line. Okay, it's on top, and it's consolidating. It's so much easier to do this. And it's consolidating under this line here. It looks like, I mean, the two fairly bullish micro time frame things, it looks like it's going to break out. Therefore, right now, the pressure is definitely up. Short-term time frame. Will the shelf life of that pressure up last more than a day or two? Maybe. However, this video, the importance of it is to identify when does the pressure change, where until that changes, the pressure is up. Therefore, I'm not simply just guessing if price is going to go up and going to go to here, which I love to do. I like making guesses, I'm not going to lie. But in this case, with FOMC minutes having been released, an event FOMC meeting later this month, I think there's going to be a lot of uncertainty in the market until folks know, is it going to be a 75-point rate hike or is it going to be 50? And I think the market's going to be fairly uncertain. So in this video, I'm going to cover why the price really could go sideways and choppy for quite some time and not do anything special. I'm going to clearly show you evidence that a guess of sideways for 10 more days is not a bad guess. And if that is anywhere close to being true, we get no rally and we get no dump, all right? What single thing do you need to look for over time to get the general direction of micro and short-term time frames so you can identify what's next? I'll show you how to be nimble in the charts. Let's go get this Bitcoin. As stated there, the 4-hour 10 EMA I have on, even though I'm on the 15-minute chart. Okay, the 15-minute chart allows me to see all of this price history in this sideways fashion with enough chaos, but I'm using the MTF EMA indicator, which I've shown on my channel multiple times. It allows me to have a larger time frame EMA with smaller candles. So 15-minute candles, a 4-hour EMA, it's the 4-hour 10. As you can see, I mean, the algorithms, I think right now are playing this line. And as we know, 80 to 90% of all traditional market trading volume is done by algos, right? And trading bots. Same with crypto. So for some reason, the traditional markets, which then affected the crypto markets, they're playing this line. I'm telling you, you should really have it on your chart. Is this always the line? No, it's not, but it's almost perfect. It let me down a little bit back here. Yeah, I really thought the pressure was down. So use this red line as resistance, tumble down. Red line as resistance, tumble down, right? But if it's using as support, it generally is going to go up. And here's where it let me down. I really thought we're going to get a bigger tumble than this. Right there. Yep. So, I have already kind of gone into that from my live show yesterday, how that would happen. This was all a planned event to go backfill the day perfectly to the previous daily candles open and then zoom right up exactly at 9:30 a.m. as traditional markets open. This descent was exactly planned. It was the timing of it and everything, right? So, even though this was used as resistance, it did have a move down and then zoomed up exactly at 9:30 a.m. that day. All right. So, there are some exceptions to this rule. It's not perfect, and this is an example of that, right? So, right now, it looks pretty obvious. This is being used as support. It's consolidating under this. It looks like it's going to bust up. What are the targets? So we're going to cover the targets first. Then second, I'm going to show you why I think this could essentially go sideways between, 18K and 22K for quite some time, and maybe 20 more days, maybe all of July, perhaps until that FOMC meeting, really. I mean, I'm going to show you that, and then I'll show you how to stay nimble with your position so you can understand the short-term and midterm time, or the short-term and micro time frames, which I think is where most of the play is going to be in a choppy market. And make sure that you're following me on Twitter at Cosasverdes with the number 2 afterward. I post some bomb charts for traditional market, Ethereum, Bitcoin, and altcoins alike. And my Discord, links to the Discord are in the description section of all my videos. If online communities are not your thing, you just want more of a a layup. I give 15 to 30 alerts on traditional markets and crypto for my higher YouTube tier, Cryptillion tier, and also give the recordings of the Discord live video voice chats for the Cryptillion YouTube tier. All right, so check this out. The target for this, I would say it's gonna be this origin line. Let me make this a little wider here so you can see it better and change the color. And so this is the line that I think that Bitcoin, if it breaks out, this would be essentially the top of its range if things were to move sideways. I'm going to cover why things can move sideways. This would still be sideways movement in the realm of it, because if you look left, the structure of all this essentially starts here, this wick down, wick up when it starts getting funky. So this is the top of the structure here. So on your chart, on the 15-minute chart, you can look left and go to about June 13th, June 14th, these wick highs. You probably want a box there, because this is going to be some heavy resistance, particularly if you see a wick down roughly meeting a wick up. That's where your box should be, on those two wicks. So you need this box on your chart. Now, where does it meet with that origin line? Way over here. So if it were to creep up there and get over there over time, it would take, why didn't it give me the number of days? This could float up for an extended period of time. That's 9 days, but technically, I still think that's considered sideways. It's very tradable. I mean, hell, that's 12% Bitcoin move. That's a strong move. But in the grand scheme of things, if you zoom out, it is sideways, right? So I want to be clear with the parameters. Let me define the parameters of what sideways means. As long as it stays under, so these wick highs over here, that's the range, and it is going sideways, right? Very tradable, and trading ranges up and down is very profitable, right? But it's still sideways under, because I'm defining the damn parameters here. It's my video, it's my channel, these are my parameters. All right, get it? So let's get those definitions out of the way. All right, however, I would definitely plan to trade that up. That would be an upper target, right? And if I zoom out and you can see the context of this origin line over 12 years of price history, let me go to the 2-day chart. Guess what? Look, that's all Bitcoin price history. Well, since 2013. Never really touched it before. And now Bitcoin price is under it for the first time ever. It's never been under this line. I'm not counting these wicks, because this is when exchanges were new and funky, and these weird wicks don't count. It's never been under this line. And let's zoom back in slowly. So let me go to the 12-hour chart. Slowly zoom in. You can see price went under it, used it as resistance, and because it's the first time it's ever gone under it, it could easily come up to test it one more time a little bit later with a higher area here. Does that make sense? So this is these origin lines are extremely significant. However, this one has never really been dealt with before, and this is what's happening on the grand scheme of things. These origin lines get price right. This is very important line. All right, and in 9 days, it'll magically line up with the range here. So let me show you why things could easily go sideways. I'm going to plop on something that from my community update that I provided for both Discord and my YouTube tiers is, here we go. So take a look at this. Take this into consideration. I got to go let a 10-year-old in my office as I'm ass deep in this video, but this is a lot to look at. So you can pause the video, whatever. This is what we're getting ready to cover. Get what you need. Get what you need. I don't care. Hey, go. You gotta go with mommy. Mommy needs you. Okay. All right. Here we go. Now, this is what we're getting ready to cover. Maybe. I need to go to the 4-hour chart. There we go. And I need to turn on the EMA fill. Sorry. That's what we're going to look at. All right. You can see I've had these labeled how long things went sideways. Okay. So that's what the pink is. The box here shows you roughly how high the range was. So this range of 28 days of sideways was 15% roughly. I didn't do it exactly perfectly. It's probably off by 0.5%, but whatever. So you have within 72 days of sideways, you would expect a bigger range because more stuff was happening, right? This was 41% here. These 24 days of sideways was about 15%. This 28 days was 15%. This yeah, and so this is what's happening now. I'm just projecting, and I'll show you why here in a minute. Let me take off these percentages here, these boxes, so we can have a little bit less distraction. And again, hey, remember, the last time I said Bitcoin will go sideways for 10 to 30 days, it went sideways for 31 days. That was among my best analyses I've ever done. Am I so confident this time? I'm fairly confident in this, and if it's wrong, then I think it could either bust up and through, or just peter out and go from there. But I'm going to show you that at the end on how to be nimble with that and how to decide, hey, shit, this is getting ready to break down. I'm going to show you the exact things you need to be looking at. All right, I'm going to take off these boxes and hopefully, boom, boom, bada, bing. There we go. Now, in general, missed one. Could have sworn I clicked it. All right. So now we have a general idea that the ranges typically are around 15 to 20%. The longer it goes, it could be a bigger range up to, 40%. Now, if we take a look at this, how the EMA fill goes back up to the 4-hour 200 EMA. And this is a lot of price history. This is going back to the 69K top, right? So let me even take off price. And let's zoom into this part here. The EMA fill, so this red line here. Oh, I have another guy. Oh, what is that? What is this red line? Okay, here we go. So the river, so let's just call this a river. It's an EMA fill, but the river goes away from the orange line, right? And then it separates too much, and then it goes sideways to allow the orange to catch up. Then it resumes going down, right? So, and then once again, it touches or kisses the orange line, zooms below it, goes sideways until it catches up, right? So it just does it over and over and over again. Am I making sense there? And those are the things I've measured. And the signature that we're getting, it looks like we just had a large separation. So see how this river separated pretty heavily from there? And it's been every single time you've had a big fall, the next big move down, at least, and this isn't guaranteeing the next big move down, but the next big move down did not happen until this EMA fill got closer and or touched the 4-hour 200 EMA, this orange line, over and over and over. And if you can project this out, because of the distance away that it came, if it only comes up to kiss this line, which happened every time since the 69K top but once, if it only comes up to kiss it, then let's say from here to here, that's about 30 days. And that would be this line crossing the origin line. So see, this is the same origin line, and the horizontal. So the thing that price would probably kiss anyway in all these examples is exactly in line with the horizontal I showed you and the origin line. So it looks like over the next 10 days, it looks like it could easily float up. But because this is sideways stuff, it's not going to be straight up. This could be fairly challenging to play, which is why I was showing you with some really small candles, the immediate price action direction is probably going to be based on the 4-hour 10 EMA. And if it's using the 4-hour 10 EMA as resistance, bumping its head on it, immediate directions down. If it's on top of it, immediate directions up. And the target, if immediate directions up in that moment, would be somewhere up here over the next 9 days. And if it continues to get rejected by that 4-hour, that red line on small candles, then you could assume, okay, well, that it might not actually make it here if it continues using that as resistance, right? So this is the short to midterm time frame outlook. It looks like it's going to go sideways and try up to me. It really looks like that's what's going to happen. And I have the immediate target over the next, 10 to 20 days, somewhere around 22,000. It's actually 23K. It's at 23K almost exactly on the nose. If it were to wick above the orange line and hit that, that would be more on a wick, not a closure basis. Closure basis somewhere, the daily closure basis somewhere around 22K. Am I making sense so far? So each time the price separates heavily from the 4-hour 200 EMA, price goes sideways until it touches it, then resumes down. In one case, since the 69K top, which is behind, let me make myself small, which is behind me here, it went sideways for a hell of a long time and actually tried to use this as support. That did happen once, and it could happen again. And how are you going to be able to tell once price gets there which one is going to play out? Is it going to just bump its head and head back down, or is it going to go up and use it as support. And that's where you can mix in the 4-hour 200 EMA with the 10 EMA. At the time that price is, so let's actually dive into that and let me show you if it does get there, how are you going to be able to tell which one's going to occur, right? I'm going to zoom in and I'm going to throw I'm going to take this off and put on the 10 EMA. So, and let's take off price. Once it gets there, the 10 EMA will still be rocking and rolling just like this, and it'll go, it can't go left, Tim. Wrong direction. You had one job, Cosas. All right. Red line, make that red. Boom, and let's make this a little bit more orange. So we're copacetic here. All right, that's definitely not orange. There we go. Orange line, red line. What you're going to be able to see here is price essentially getting stuck between here. And if it comes below the red line, uses both as resistance right as it's crossing, that probably means it's just going to kiss and come back down. Does that make sense? It greatly increases the chances. And again, this intersection is, let's say, I think it's about a whole week away, right? It's a whole week away. But as it approaches, if price can continue using the 4-hour 10 EMA as general support and specifically not using it as resistance, then it's probably going to break above and at least hit this box and potentially go a little bit above it. Does that make sense? So this line, the red line or the 4-hour 10 EMA, which you can see with 5-minute candles, is going to be paramount. Hopefully I'm making perfect sense on how to adjust your outlook of immediate Bitcoin price action in the near future. Now, for immediate Bitcoin price action, I guess now, let's go to the 5-minute chart on whether it's going to break up and out of this. I'm going to take that off and put on the 4-hour 10 EMA. So again, so will this break up and out of this support and resistance line? As long as it is not using this as resistance and is above it, it's statistically more likely it's getting ready to break up. And we know the target over the next 9 days, 22 to 23K. In general, it looks like it's going to break up. If it breaks up, so let's say something in the middle, it stays above there for a while, breaks up, but then it all falls apart, that's possible too. It could be a fake out up to here, boom, something like this, boom, boom, and then comes back down, and then really starts tanking. But you'll be able to see at some point the red line being used as resistance like this, and price will be on small candles be essentially bumping its head. See how it bumped its head on the red line there? If yellow is price and red is the EMA, you're going to be able to see that transition on 5-minute candles. Similar, even though this didn't work out very well because it zoomed up. This was all a fake out. This was a miniature bear trap, essentially. It did use this as resistance and then come down. Something to this effect, price going below the red line, then using it as resistance, then ticking down a little bit. That's your indication that all of this could break down and that target might not be hit. But until you see that type of signature, I'm telling you, it's much more statistically likely that in general, Bitcoin over the course of 10 days might want to float up there. Could it do it aggressively? Maybe, but this is what I'm looking for. And this is essentially your invalidation point, is if you see this price on 5-minute candles or even 15, whatever, you do this to the 4-hour 10 EMA, then the chances of a floating up price action becomes less and less. Is that the deal breaker where probabilities flip? Nah, not necessarily, but it makes it a lot less probable. And things floating up and for the next 9 days is extremely probable until you see that happening. So let's go ahead and take a look at what could really make this tricky, though. And I'm telling you, is traditional markets. Let's just look at how they closed. So traditional markets are also using the 4-hour 10 EMA. And this line up here is an origin line, and it just hit it and got a bad rejection. I think it was a bearish engulfing last 1-hour candle of the day. So this is an origin line. It wasn't bearish engulfing. It didn't close bearish engulfing. But this was a pretty nasty rejection, and this is NASDAQ Composite Index, S&P. Zoom out, that's an origin line as well. They both got a bad rejection from an origin line. So this helps, this helps the chances of sideways action, because before it breaks up and out of here, given that the red line is also being used by the algos for the most part, for general price direction, it might need to wait for this red line to get up here to push price above, similar to what's happening on Bitcoin right now. Am I making sense there? Because price already got rejected from this line, so now it probably needs to come back down. Traditional markets, over the next several business days, it probably needs to interact with this 4-hour 10 EMA, then bust up. Does it have to? Absolutely not, but this would support the idea that Bitcoin could mosey sideways and flow up over the next several days, because traditional markets, this is going to close, right? This chart will close over the weekend. So Bitcoin might do a bunch of nothing over the weekend, just straight up, straight down. And then from Friday to Monday, I mean, there might have been some up and down, but it's at the same exact level on Monday that it was left off on Friday. That's completely possible because this chart won't be moving, right? And Bitcoin might do nothing. So come Monday, then price on this chart starts getting squeezed between this origin line and the 4-hour 10, and then decides to break one way or another. And let's just see how many days that could take. Something to that effect. 5 days. Let's see here. Boom, boom. Bada bing. Yeah, that could be 5 to 6 days. Something to that effect. And that would allow for Bitcoin to simply mosey sideways fairly directionlessly, at least until Monday, Tuesday of next week. Am I making sense here? So we have a lot of evidence in the charts that Bitcoin will establish a range between its recent lows up to 22 to 23K. That the culmination of that will take about 30 days. We're about halfway through that, so another 2 weeks of moving sideways and maybe up, but perhaps both directions in that defined range is extremely likely at this point. And I also, if that point does happen, I showed you in this video, well, how can we tell if a bear market rally is actually going to occur or not? And it's using the red line with the orange line, the 200 EMA with the 4-hour and the 4-hour 10 EMA. How price is interacting with both those EMAs, you're really going to be able to tell which one's going to happen, and it could be a very, very profitable decision that one makes if using that information. It could pan out extremely nicely for you if you're paying attention at that time. And again, on YouTube, I will go ahead and make sure I give you my thoughts on that once that plays out. So click this video right here if you want to see how to set up a chart just like mine. It's a very condensed 28-minute trading view tutorial, and click this video over here if you want futures trading tips that you're not going to be able to find anywhere else. It could be a lifesaver. We'll see you next time.